Hi, Armando Roman with AXIOM Founders Family Office and with John Farr from Columbia West Capital. John, how are you?
Doing all right. How are you?
Good, good. John, thank you for this time that we're having right now. What we'll talk about, as we discussed earlier, is when someone goes through that sale for the first time with the business, they've not done this before, they might get some offers from foreign buyers, maybe from Europe or from Asia or just foreign buyers. They're already going to be a little bit maybe nervous, apprehensive, stressed about going through this once in a lifetime sale. And if we can talk about that foreign buyer specifically, should they be concerned about a foreign buyer? Should they be excited about a foreign buyer? Is it really just the same as anybody else from any other state? But let's just touch on that for that seller who's not gone through a sale before ever. And now he's got an investment banker engaged. He's got a couple of potential buyers that are foreign. He just doesn't know what to make of it.
Yeah, no, that sounds great. And I'll say for the viewer, this video came about through a discussion that you and I were having on a particular scenario that one of your clients was experiencing, and given the content was relevant to a lot of others that both you and I talked to, you suggested we post about it, which is great. I mean, you're always
Perfect.
um, great with sharing information with the community and quick to think about that. I think it's great, and I know it certainly served you. But I'll
Thank you.
start maybe Armando by saying I'll characterize this discussion as what I've seen.
Okay.
I don't want to suggest we're experts and only focus on cross-border transactions.
Right.
It is fair to say, though, with most of our buyer list, we are putting foreign nationals on those, given they tend to be good buyers, right? Often, especially if our client is a strategic fit, often foreign companies seeking to gain a foothold in the U.S. Are excited to buy here. So I'll speak from that experience,
Perfect.
and you're welcome to
And John,
fire away.
I will ask you, John, if I mentioned you're of course with Columbia West, that's your company. You're an investment banker. Just in a very broad picture, describe what you do as an investment banker for that seller of a business place.
Sure. We're most commonly working as an agent, helping a business owner sell their company. We will do capital raising, debt and equity capital raising, but the vast majority of what we're doing is helping people sell. So
Okay.
it's very typical to work with a smaller middle market business who is selling to a foreign national. And perhaps to back up, prior to CWC, I grew up at Deutsche Bank and moved out here through Honeywell Aerospace, both of which were global organizations, and so spent a lot of time with cross border transactions, both on the M&A, equity and debt capital market side as well. So comfortable with these broader discussions. I'll also say the answer is sometimes nuanced. Sometimes the differences are nuanced. And certainly it depends on the buyer, but I'll try to make some generalities, hopefully without offending any of the deal guys from those regions. And I'll talk about whatever's on your mind.
Yeah, your client here is say that company in Arizona or Iowa or any place else in the US going through that first time sale. They see a buyer who's maybe from Europe or from Asia. They just don't know what it means. So as you talk with that owner about these prospective buyers, they might ask you about, are negotiations different with someone outside the US? There are cultural differences in how they negotiate on their expectations. Um, what might they experience or expect as they think about a non-US buyer of their business?
Sure. Sure. I mean, I can make some generalizations and maybe
Sure.
not to rant for too long. Feel free to interrupt, but I'd say what we've seen a lot of are over the last several years are Asian buyers and particularly
Okay.
Chinese buyers. We have seen um, they're they tend to be culturally a lot more open to back and forth, as
Okay.
opposed to the United States, where two parties might resolve something, and both sides would be held to that decision, even if the deal closing wasn't for another 15 days or what have you. With Chinese negotiating style, you see it a lot more iterative. There's a
Okay.
lot more back and forth, even if they covered it before. So they almost negotiate right up to the line. and revisit items that you've already covered.
Okay.
I think with all cultures, but certainly Asian cultures, respect and the notion of face saving is very important. And the notion of relationship is also very important. So that's attractive. What I would also say is that if you hit on those factors and you come to terms, valuation tends to be less critical,
Hmm.
which I'll selfishly say means we're often able to get better pricing on the valuations for our clients that we tend to be selling. So
Okay.
um, Asian buyers, to grossly overgeneralize, okay, may be willing to pay more.
Hmm.
Not always, of course, but that's important. And then, just as an anecdotal thing, the relationship always ultimately begins with a long dinner. I've noticed. You have that certainly with Chinese buyers where they want to spend a lot of time with you. Jokes aside, they like to drink to build a relationship. If you're in China, you're going to be drinking this stuff called baijiu or this other strange thing that's very gin-like. It's very pungent, but you can smell that evergreen thing. It's awful, but we sit there and smile and build a relationship, and that goes a long way from
Yeah.
relationship building. Notice that that's very important in China, very important in Japan to have that quality time with the buyer.
Okay.
Um, I'll just keep going, perhaps, but
Yeah, please.
the cultural distinction with Japan very specifically is time. They are very slow, extraordinarily slow. Well, let me step back. For the record, I've only really dealt with Japanese conglomerates.
Okay.
Conglomerates are very slow anywhere, right? But I've not really dealt with entrepreneurial firms in Japan. But what I've noticed is that they both require ultimately approval from the top, but they also build consensus. So I think what you have is this thing where you're having these delicate decisions that are moving very slowly, both up the ladder and then back down until it's ultimately communicated to me,
Right.
the banker.
So, so, so
So it,
even, so even though John, excuse me, even though there may be a decision maker, there still is a consensus building happening within their company before the decision maker makes the official decision to say yes.
that is correct, and it often seems to go all the way to the top for those largest
Okay.
deals that we've dealt with. Again, I'm making a lot of generalizations,
Yeah.
but
Yeah. Yeah. Yeah.
in terms of documentation, they tend to be very cautious with risk. I would also say about Japanese related things that I've seen. Uh, if the relationship is strong and the documentation is there and the transaction is as everyone wants and their strategic value, they also tend to be willing to pay more
Mm.
to have those considerations. So that's also important to note.
Okay.
So I think what I'm saying is while there might be cultural differences that one has to wade through during the sale process, sometimes having foreign national buyers on your list is attractive to the extent you're opening your opportunities to raise valuation in an
Okay.
auction process. I think it's always the case that more eyeballs equals greater chance for valuation, but um, that's certainly true when you're adding some of those foreign nationals to it.
Okay.
Oh, another thing I might mention, I structurally, I've seen Japanese firms be more willing to do partial acquisitions. Here in the U.S., when you get over 20%, it's a pain for U.S., especially publicly traded buyers, because you have to consolidate earnings. So there's an administrative burden and financial reporting
Right.
burden in doing so. So the notion is once you're over 20%, they almost always invariably demand 100% in the U.S. They don't suffer from that in Japan. I've seen multiple acquisitions where they took down 60%, 80% uh, of a company and ultimately bought the rest of it or chose to not buy the rest of it. I think Sun State was one of those. Who was that? Sumitomo. Sun State sold 80% of its business to Sumitomo, and then just in the last year or two sold the remaining bit. But you have that partial acquisition that's fairly unusual among
Hmm.
large publicly traded businesses in the U.S.
Okay, but that's interesting. So, one thing I've heard you say many times is, what is the buyer really trying to achieve in this transition, in this exit? And so maybe if their goal is to sell most of it and retain a smaller portion, this might be an avenue to get there.
Correct. Um, Large companies in the U.S. have venture capital arms, so for them to take a smaller stake in a company is not unusual. But it's rare to see a majority deal that still leaves upside in the form of stock, where it's uncertain as to when that would be exited. You see earnouts certainly, or you see people that roll stock, but not, but they tend to take equity in the buyer. But what's unusual is that a seller would retain some of their own stock when sold to a private company. That just almost never happens in the U.S.
Hmm. Yeah, that's interesting. That's interesting. So you mentioned some of the cultural issues, a longer dinner or a longer relationship building up front versus maybe what we're used to here. That might be part of what might happen. Um, what about you touched on regulatory issues too with and I think about a sale I know of recently that took place where the buyer was from, I believe they were from Taiwan, and it was a surprise at the latter part of the business sale that there was some kind of an approval required that the US federal government had to give it their blessing basically. And I remember thinking to myself at that time, John, well, I hope that at that time there was a lot of big cuts being done at the federal level. And my immediate thought was, I hope the people who are making those decisions in our federal government still have jobs. Otherwise, this sale, I don't know what's going to happen with it. Luckily, fortunately, the people did still have those positions, and the sale did go forward. But to them it was a surprise at the latter part of that. And I imagine depending on the industry that might be there, like with FDA or something like that. That
Well, actually, that's what I was thinking of. The FDA has made a lot of cuts, and I've seen a food business recently be affected by the fact that they were expecting feedback from employees that were no longer in that department. So it's that government cuts aside, you're asking about regulatory
right.
authority. Um, well, I'll frame it by talking about the U.S. Right? We deal with national security, antitrust, and securities law. Most of them all have some relatively comparable business. So, here in the U.S., it goes through what's called CFIUS. It's basically a committee on foreign investment that assesses really from a national security perspective what's okay and what's not. But it's true that they also have that authority. The PRC has an organization that does that. And that also China is what I'm talking about. The Chinese government has certain tests that are required to go through for companies that are associated with both trading and antitrust and national security. The UK certainly has that, and the EU has that. Um, as it relates to antitrust, the EU Commission is known to be more stringent and tougher on acquisitions than our FTC has been historically. And that maybe the most famous example of that was the Honeywell GE merger, which ultimately didn't happen, but which was approved in the US. And those companies went as far as to begin selecting, who was going to run certain departments and who would be heading divisions and who was going to be laid off, only to realize not quite a year later that the European Commission did not approve that acquisition. So
Wow.
that unraveled. But again, each of these countries is going to assess on those three categories. The
With the
PRCs,
antitrust,
things.
securities, and national security as well.
Sorry.
Yeah, you said national security, antitrust, and securities typically come into play for at least within the US, right?
Correct.
Yeah.
Correct.
Okay.
And if a foreign national is buying in the U.S., certainly CFIUS is going to be involved, and you'll also have to check the ITAR box. I mean that is basically more specifically related to countries that are involved in terrorist activity or selling arms to terrorists. Someone that we've determined is not a viable trading partner legally, so you cannot sell to one of those countries. But beyond that, CFIUS is more actively involved in assessing technologies which are at risk or at risk of being sold based on some other relationship with that buyer to someone we don't like.
Okay.
Or have fears. Let me say it more politically. Someone we may have fears
Yeah.
could misuse that.
Yeah. And that would be really determined by our US federal government, who they've determined is like they do those travel warnings, right? US citizens are not advised to go to X country because of something.
That's correct. But you'll see that the buyer's country also has certain regulations that they have to approve, but it's usually dictated by size. Like I know the UK is like 100 million pounds as a crossing point where they have to assess national security and some other things that are very important to them. Antitrust there is done. It's called the CMA. What's that stand for? It's like a competitive markets assessment or authority or something, but
Okay.
they basically serve that role of the DOJ in looking to see if an acquisition is going to be anti-competitive.
Yeah.
They also have certain protections around employees called the transfer of undertakings that basically is designed to protect employee jobs. So when you acquire a business, it is understood that all of the employees are to come over to 𝐬𝐲𝐶 under the same salary and other arrangements, benefits, and so on. It's automatically expected. Here in the U.S., when a buyer buys a company, they often very specifically try to structure it so that they're allowed to cherry pick employees. So that's not the case with the UK. So you see that a lot in France, as you can imagine, in
Mm.
other European countries. They are more employee friendly.
Yeah.
The US is more predator friendly and company friendly. They seek to, um,
Yeah.
you know,
Yeah. So an owner, it sounds
care with
like, yeah, thank you, John. So it sounds like an owner who really wants to when he or she steps away from their business and they want all the employees to have their jobs and know that that's part of what you might get with say a French buyer or maybe a buyer in the UK
yes, for sure.
where it's actually mandated as part of the part of just their government system, it sounds like.
For sure. And in bankruptcy, it's even more extreme. I've seen a transaction in France where the company was actually given to a buyer for 1 French franc, but with the understanding that they had a plan that retained all employees. And frankly, it was a business that was overstaffed and was losing money, but they sought to retain those employees more so than they sought to ensure the
Hmm.
continued sustainment of that business as it was. So it was restructured, but with employees in mind.
Wow, interesting. Interesting how the different countries have their own views and their own not thoughts, but their own regulations that can certainly impact. So the seller here who's not gone through sale before, a lot of this might be very, very new, of course, because they just don't know.
Yes, but into your question, it's a client-centric question. What does your client, which I presume is a U.S. seller, care? I'd
Right.
say it's the job of the transaction attorney and the investment banker to wade through those regulations and make sure that everything has been provided to those buyers. But uh, I'll I'll say, not to be cavalier, your client doesn't care if they're getting better valuation terms and conditions. And from our perspective, it might be a much more superior buyer in the event that you're able to get better valuation. If that foreign national has great strategic value in getting a U.S. footprint, perhaps they'll pay your client for that.
Hmm.
Uh, but these nuances you also have to be conscious of, and have agents who are paying attention to them to make sure that there are no missteps or surprises.
Yeah, interesting. Interesting. Just hearing what you're saying. And I think you mentioned before, foreign currency, a foreign buyer makes me think about foreign currency. Does that really come into play? Does it have any bearing on the sale to a foreign buyer?
I think you can structure around it, is how I would say it. Yes, they may very well want to pay for you in euros, Hong Kong dollars, whatever the case may be, but you can fairly easily do an FX swap to reduce that risk if your client is worried about it. If commonly a transaction is dollar denominated.
Okay.
Okay, so it doesn't come up as frequently as you might think. And banks are designed for this. When you over there transfer your Hong Kong dollars, they get switched to US dollars upon conversion that day. If for some reason you are paid in a foreign currency, there are plenty of investment banks with capital markets desks who are happy to structure for you a an FX swap, so you can swap
Okay.
euros to dollars for a small amount, and it may affect the purchase price by a fraction of a percent,
Okay.
but it can convert that to dollars in the event that it's necessary.
Okay. So really not an issue then. It's an
No,
easy.
I don't think so.
Okay.
I don't think so. And they're fluctuating and we're fluctuating. Unless you're um, selling to an Argentinian company, or another some third world country that has extreme volatility. I wouldn't worry about it too much.
Okay. It sounds like then, John, what you're saying is the owner of the business, the founder who is now selling for the first time, when they come on board with you and you're helping them to go through this process, and all of a sudden they see two or three foreign potential buyers in that mix, they really shouldn't be afraid of it. It might get their attention, of course. They shouldn't be afraid of it, but they should maybe understand some of these, as you mentioned, some of these cultural nuances, or maybe nuances that happen within their own country, the buyer's own country, but shouldn't be necessarily afraid of that, just understanding it might be a little bit different.
Exactly. It may be different. There may be a cost as it relates to a little bit of time. There may be some administrative costs associated with wading through some of that, providing more material to that buyer because they have to get approval. But that's okay if you're at that IOI stage, at least, where that it's worth it. I mean, what I suggest is um, you run the transaction as we normally might in the US, which is to say that we create that offering memo.
Yeah.
We answer some questions, but we don't get into what I'll call thorough due diligence until later. You accept that list of IOIs that say you go out to 200 people and you get 10 IOIs. You assess those and determine that there are 3 companies on that list that you're going to spend a lot of time with going forward and answering their questions. So, ideally, the way we run a transaction here is designed to save time, and you wouldn't want to do all of that for 10 or 20 or 30 companies.
Right.
You try to limit your amount of time spent. But I will say, out of the other side of my mouth, the Japanese, for instance, very frequently want to do more due diligence up front. They really want that letter of intent, indication of interest, or letter of intent to stick, and they don't like changing that. So what you commonly see is they're out of fear of making a mistake. They ask a lot of questions up front, and that does create a tough decision, really, for you and your banker, you the seller and your banker, to say how much time are we going to spend with this person? Is there a chance that we can flesh out an approximate valuation range before we go down that road of answering questions? You can do that, but commonly that's hard to get. So I have been in that situation before.
Okay. Okay. Well, this is quite helpful. Just one more question for you, John. The as an investment banker, of course, you're helping that owner go through this sale, and many have never gone through a sale before. They don't know what they don't know, and you're educating them and of course doing your thing for them to help them have a successful exit. The This is September of 2025. The way the environment is today, the buy sell environment, do you see, is there anything that tells you that maybe as a seller is thinking about selling, that now maybe there might be more foreign potential buyers who are interested in their company, or maybe in prior years, maybe not so much that would happen, but maybe now it is more likely?
Well, it's a whole bunny trail that we can talk about. I'm sorry, my thin dreams. A whole bunny trail we may not want to talk about, but I will say that I have heard of foreign companies consider more acquisitions here, given the current tariff environment.
Yeah.
I actually don't think that is a solution. The company of record, the importer, is the one that has to pay those tariffs, and I actually don't believe that the owner of that business, if there's a change of control, I don't think that will obviate the requirement to pay tariffs. So I think if you buy a U.S. business as, say, a Chinese or a German company, I don't think you can get around those tariffs.
Yeah.
I do think that some people believe that you can. So I'm answering your question very directly. Is there a reason why some people are considering it more? I have heard that they are, but I'm not sure it's the best reason.
Yeah.
I would say that the globe has been choppy generally post-COVID, and some people may run to the U.S. as a perception of stability.
Mhm.
This is a stable economy. I'll knock on wood and say that it always will be on a relative basis.
Right.
But I don't think that's new, right, Armando? You
Right.
ask what's new come lately. Um, I think this is always a spending market. This is from a capital markets perspective, the largest market. So there are a lot of European and Asian companies who want to have a presence here to raise capital here with the perception that it is less expensive to raise capital here. This is the largest debt capital markets market on the globe. So it's cheaper to raise debt capital here, and easier in terms of the number of organizations who can process that. So the world mostly still today does business in dollars. So doing dollar denominated capital raising is easier. So and then from a market perspective, there are buyers here of products. And so it makes sense for companies to have a
Yeah.
presence here. So
We are a consumer-driven society, right? We spend money on stuff.
I think that's going to continue.
Right. Well, John, let's touch on quickly on a couple things. You mentioned some cultural issues, maybe regulatory issues. You mentioned, here in the U.S., national security, antitrust, and securities are things that we have to be aware of here in the U.S. And that, a prospective foreign buyer shouldn't make the seller run for the hills and be afraid. Instead, they should maybe take a look at it and understand that it can be a very viable buyer for them. Culturally, some of the processes might be a little bit different, a little more time up front, as you said, depending on the buyer's culture and where they're from. But it certainly seems like it has been and can still be a very successful exit for that seller if it meets what the seller is trying to accomplish. And you've told me before that when you meet with a seller who is thinking about going through that sale for the first time, you want to make sure you understand what they're trying to get to so you can help be their guide along the way and help them achieve that outcome as much as possible.
Correct. And are you expected to roll equity? Are you getting 100% of the proceeds at close, which greatly de-risks any transaction?
Mhm.
or are you expected to roll? In which case, you may want to spend more time assessing some of these issues and cultural distinctions and looking for risk and paying attention to that. But I'm less concerned about it, and I think you know pretty quickly if there are opportunities, right? You look at that indication of interest to assess is that incremental amount of administration and effort worthwhile or not. You should know 3 months from any kickoff of a process whether or not it's worth it.
Fantastic. John, thank you so much. We touched on a wide area here within that, but I think that's extremely helpful. I know that as I've been talking with prospective sellers, the foreign buyer has been coming up in conversation. And what will that look like? I guess we'll see. As you said, well, we're still regarded relatively as a very stable market here in the U.S., and presumably that will continue. We all hope that anyway.
Right.
So good. John,
Right.
again, thank you for this conversation. I really do appreciate it.
Great to see you.
Yep, you too. Thank you.
Okay. Have a good weekend.
You too. Bye now.